Welcome back to the deep dive. It's Monday, February 16th, 2026, and today we are looking at a huge shift in the semiconductor landscape.
It's a seismic shift, really.
Exactly. I mean, if you've been watching the markets, you know AI isn't just hype anymore. It's really settled in.
Oh, absolutely. It's the structural engine for the entire tech sector now. It's not about the next cool chatbot. We're talking about the industrial backbone of, well, everything.
And the scale is just staggering. I saw a projection that global spending on wafer fab equipment, WFE, yeah, that's just the heavy machinery to actually make the chips.
But it's projected to hit $135 billion this year.
It's a massive number. A lot of hardware.
So that's our mission for this deep dive. We're unpacking a strategic report on 5 key companies that are, defining this whole new era.
And it's a great mix. You've got the huge chip makers everyone knows, but also these sort of hidden chemical suppliers.
And that's where I want to start, because that's where the real overlooked value seems to be. First up is Qnity Electronics, ticker Q. Right, the DuPont spinoff from last October.
The valuation gap here is just wild. The stock is trading at, around $111?
Yep, about there.
But the report suggests its fair value could be up to $681?
That's right, $681.
I mean, that implies the market is missing something huge.
It is. It's a classic categorization error. The algorithms see chemicals and just think it's a boring, slow-growth materials company.
But it's not.
Not at all. Qnity has quietly penetrated 80% of the semiconductor market with its specialized chemistry. Their stuff is the only thing that works for the new 2-nanometer chips.
So it's a high-growth tech monopoly disguised as an industrial stock.
Precisely. And that gap between perception and reality is the opportunity.
Oh, love it. Okay, so those chips get hot. Really hot. That brings us to company number 2, Solstice Advanced Materials, SOLS.
The spinoff from Honeywell.
Yeah.
You can't run these massive AI data centers without advanced cooling.
Yeah.
Solstice makes these essential low GWP coolants.
Low global warming potential, so they keep things from melting down without, cooking the planet.
Exactly.
I saw something really interesting in their metrics. A negative beta of minus 0.49. That's pretty rare.
It's very rare. It means the stock often moves in the opposite direction of the broader market.
So it's a kind of hedge, like an insurance policy for your portfolio.
You nailed it. When high-flying tech sells off, money tends to rotate into these defensive, essential infrastructure plays. It's a great safety net.
Okay, so we have the chemicals and the cooling. Let's get to the titans. We have to talk about Intel.
The great turnaround.
For years, people were just writing them off.
They were.
Yeah.
But under their CEO, Lip-Bu Tan, they've shifted from defense to offense with this IDM 2.0 strategy.
And IDM is integrated device manufacturer.
Right. So historically, they only built their own chips.
Yeah.
Now they're opening their factories to build chips for anyone, even their biggest competitors.
And speaking of competitors, this report highlights a $5 billion investment in Intel from NVIDIA.
That's the shocker. It's a massive vote of confidence. Analysts called it a kiss of life for Intel's manufacturing roadmap. If NVIDIA trusts them, they're back.
So if Intel is the turnaround, AMD is just pure growth.
They're the growth powerhouse. Revenue was up 34% last year, hitting record highs. They have really cemented themselves as the dominant number 2 in AI accelerators.
And the market hates a monopoly, so customers want that second option.
That's the whole story. They are laser-focused on high-performance computing, and they're aiming for huge earnings growth by 2030.
So that leaves the company that provides the tools for everyone else, Lam Research, LRCX.
Lam makes the machines that make the chips. They're the backbone.
The stock chart reflects that, up over 184% in the last year.
They have incredible pricing power. You simply cannot build a modern chip fab without their etching equipment. It's essential.
So we have these 5 companies. The report's strategy is to scale in. I take that to mean you probably shouldn't YOLO your life savings in all at once.
Yeah, please don't. This sector is volatile. Scaling in just means buying gradually. A little bit now, a little next month. Just smooth out the bumps.
Makes sense. Okay, to recap, we've got the undervalued spinoffs like Qnity and Solstice.
The turnaround giant in Intel, the growth engine in AMD.
And the essential infrastructure from Lam Research.
It's a really solid, diverse mix.
Yeah.
But you have to remember the risk. This is a cyclical industry, and it's very sensitive to geopolitics.
A crucial point. If trade wars heat up, this sector gets hit first.
Always.
Okay, a final thought to leave you with then. In a gold rush, everyone says to sell the shovels. But maybe, just maybe, in 2026, the real money is in the companies selling the ice water to keep the miners from passing out. Thanks for listening to The Deep Dive.